Hello everyone, this is Teddy Keckstead from Forex Trading Unlocked, and we are here on July 15th with a Forex and cryptocurrency trading analysis for you live. We're going to be interacting with some of our viewers, hopefully, on the chat room today, and we have our disclaimer right now, just to remind you that this webinar is for illustrative and educational purposes only. And with that, we're going to give you one quick plug just to remind you, if you have not done so, please subscribe to either our Twitch or our YouTube channel, and all you have to do is do a search Forex Trading Unlocked and subscribe and like our channels, and then you'll know when our videos are coming live, and we can also follow up and check on our old past videos as well for our lessons and webinars we've been producing. And also, if you would like to check out the book High Probable Japanese Candlestick Patterns on Amazon.com, it's available in paperback and Kindle versions, written by yours truly. We'll be going over some of these signals that are occurring currently in the marketplace. All right, so with that, we're going to get to our live action screen here. We have the forex-trading-unlocked.com website pulled up. Before we get into that, we want to show you real quickly our YouTube channel, Forex Trading Unlocked. Here it is. When you go to it, hit the subscribe button, and then you can check out our most recent uploads. You can check out our created playlist. You can see our featured channels with partners and companies that we work with. We do webinars for eOption and Nadex. We have lists for those on our station as well. And then TFNN.com, we also are on there on a weekly basis, pretty much every Wednesday at 8:40 a.m. Central Standard Time, where you can check us out and hear our conversation for the week on Forex and equities and other markets around the world. Okay, with that being said, also don't forget to check out our Twitch channel, which is also, for some of your viewers, is the way to go. And on that channel, you just do a search also, Forex Trading Unlocked. You can see this is live streaming from it. You can find out when we have different webinars posted, as well as access the book, High Probable Japanese Candlestick Patterns, right from there. All right, enough of that. Let's get to our analysis. All right, so we're going to go to our Market Analysis and Education tab. We're going to click on the Forex Trading Unlocked Workstation tab. We're going to bypass the numbers. We're going to go right down to our chart. Get rid of that. Get rid of that. Make it a little clearer for you guys out there in streaming land. Okay, so we have the Euro US dollar chart pulled up right now. And let's see what's going on. So it's been kind of an upside down week. We're just basically chopping around. As you can see, we have the Euro US dollar slightly lower on the day. It made a little bit higher of a high than it had yesterday. But as you can see, not that significant. What you have to pay attention and be mindful of is the fact that it has made a lower move low as of Monday and as Tuesday and Wednesday. Today on Thursday, we tried to push resistance a little bit, but not much occurred. And as you can see, all that happened is that we have made a lower move high. So let's check out the hourly basis here. All right, so as you can see, the hourly has been trending lower. We set this high here, we came down, set a lower move high, and now in the last hour we have set a lower move low on the hourly. So hourly, we are starting to run out of a little bit of gas. I think on the day we may be pretty much ready for a little sideways action as we head into the lunchtime trade. But right now, Euro US dollar probably is going to be under pressure just a little bit this afternoon. What is interesting is that we have a big rally going on in the bond market today. So the dollar being strong right now with the euro is rather interesting. You would think that the euro would be getting a little bit more of a lift. So I would say use caution selling into the Euro US dollar at these levels, at least currently right now today. So as far as some good intraday levels, I would say be mindful of this downward sloping channel here. Remember, the trend is still bearish no matter what. Right now we're looking to see if we're going to have a breakout to the upside or if we're going to start to fall back on support. Right now the way I see it happening is that we're probably going to be quiet for the rest of the lunchtime hours as we head in towards the last few trading hours of the afternoon. If you go on the Fibonacci level here, we're right in this little pocket. it's a good place to rest and chop around. You can see where it was kind of a key pivot area before. Let's see how we react. The question is, can we get back above this last high from a couple hours ago? Above 118.24 on an hourly basis, then I think you're going to have a nice little run back up towards 118.40, then start to run under pressure as you butt up against this downward sloping resistance line on the hourly basis. The market is kind of wedging. I mean, here you can use this as a little bit of support, but we can also move this over here. Let's get this away from these arrows so I can set this up. There we go. All right. So if we go by this, the market could be wedging and start to bounce between these pivots here around 118.03 up to 118.11. This could be the chop zone. I would use caution at these levels. I mean, obviously anything can happen, but we'll have to, I would say, be mindful of what's going on here. Remember, the past couple days, no matter what, we came off of these lows and turned around right away. So we're, as you see, like here, we made this little low here. We rallied up to this lower swing high, and then we came down, we made these new lower move lows, but it's only by a few pips. If you look at it here, the low was around 118.48, and then we get down to 118.06. So you're looking at only about 40 pips there from one low to the next. Then the same thing happened here where we are at 118.07 and we get down to 117.80. You know, it's basically another 35, 40 pips, you know, now. And then we have this one here, which is a little bit tighter. The last low that we set here when we were around 1780, then we get down to 1770. So here we're tightening up, starting to find a little bit more of a firming up of support. The question is, are we basing, or is this just a kind of choppy pause before the market continues on its bear trend? So you got to be very mindful of these pivot levels right now. Obviously, we're on the lows of the session. Market's kind of weak. There's a lot of reasons for the dollar to be gaining strength right now. The thing that really doesn't make any sense is that if you look at the futures market, and when you go to our markets tab, you go to futures, come down here, and if you look at the 30-year and the 10-year, ironically, they're rallying pretty well today. So yesterday, we had a little bit of upside action here yesterday. Now remember, futures are always in delay, so 162.19. They were trading at 163.16 not that long ago. So now you can see that this market is trading right around 163.17. So this is where it's at right now. So the bond market made a higher move low and is reaching to make a higher move high. This is without any type of real interaction from the Fed. The dollar should be under pressure right now, whereas right now the number one factor in the dollar index, the euro, is under pressure. So it's very interesting to see that we have euro weakness right now and dollar strength with the rallying bond market and some other fundamentals that are going on. So be very mindful of these trades. Do not try and catch a falling knife here. If you're a bull, I think you're in a lot of trouble. I would still look to sell rallies in this market. That's where the outlook is for the euro US dollar. Now let's go to the British pound US dollar. I want to pull this one. I got to pull this over to another screen. Sorry, folks. Just had to get that out of the way so that we could share this on Twitter. Okay. All right, so British pound US dollar, look at what's going on here. Now this market's lower on the day as well. However, yesterday it came off a higher move low. So this market is definitely grinding without a doubt. It's consolidating. Even if the euro US dollar maintains the bearish trend, the British pound US dollar is in a bearish corrective phase right now. That pretty much bottomed, or actually did bottom at the beginning of June, and now it seems like we're more in a consolidation pattern. I would be very leery of shorting the British pound into any sign of strength. Even though we made a higher move high today and fell off of it, I think range traders are doing well right now by selling into new highs and buying into new lows, just because of the fact that we are obviously consolidating right now. Once we do break out, be careful, because any move either violently to the upside or the downside will most likely set off a $3 to $4 move. So right now we're trading at 138.19. For us to, if we take out this high that was set a week ago, last week, above 139.13, this market's going to most likely skyrocket to the upside. Downside resistance is definitely in play, but for us to get up to 140, up to 140.5 in this area is very, very possible. So I would be mindful of any upside breakouts. This means that even if the euro US dollar is under pressure, they could be making new lows. It doesn't mean that the pound can't get up to this area right here. Now, should we fail from this last higher move low here around $1.3745, all bets are off as this market continues the bearish correction and ride support. Like I said, unless there's a really big dollar rally going on, which I can't see happening when you have gold stalling, bonds and 10 years rallying, meaning lower rates. These are all factors that tend to put a little bit more of a restriction on the US dollar. So it's going to be interesting to see what happens with these markets, especially as we head into Friday's trade and the weekend. I think it's a trap. I would be very, very careful of what's going on here right now, just because if we have any inflationary numbers that come out anytime over the next few weeks, let alone the next few trading sessions as we go into next week, we're going to have probably a big slew of dollar buying, bond and 10-year notes selling, and most likely you're going to have a lot of selling of the euro and the pound, and especially the yen. That's another one we're going to get to, where we have the Asian currency markets maybe in a very, very long-term bear market too. That's not going to stop for a while. So anyhow, right now we're looking for some signals. We are coming off of a higher move low. We're only grinding higher. I would be mindful of the trade right now. It's going to be very choppy. I think it's a range trader's trade where you're selling into the highs and buying into the lows. We're not really getting any follow through. But if we get above 139.13, that confirms higher move highs after a higher move low. Short-term trend remains intact. This area up from basically 140.20 up to 141.10 is going to be your target area for the upside for any big slew of buying that comes in. That also puts us into key resistance for the short-term bearish correction, where if we get above that area, then we are resuming the long-term overall bull trend that the pound has versus the US dollar. All right, US dollar CHF. Let's see what's going on with the US dollar and the Swiss. So US dollar Swiss, we came off of a lower move low, and now the market is rallying. So we got dollar strength coming back into the marketplace. The question is it going to last? This could be viewed as a head and shoulders formation that had occurred right here. We could also view this as just a beginning of a wide range trade setting up. I would use caution, probably between somewhere around this area where the low of today was and up around the highs of those last sessions a couple of weeks ago. We're most likely going to end up grinding around. If you look from April, granted we treaded lower down here and made this bottoming base, but now if we are at this top of a correction, then we're looking to go sideways to lower. So I would be very mindful of that. We did take out, if you look at it, oops, let's get this to where you can see it. Okay, so we had, if you go off of this low, yesterday already we had penetrated this upward sloping support line, keeping the trend intact. Then we did rail, we came back down and made this low down here, and now we're trading just above that line. So we're riding it by attrition. This is a good support line. It's around 45 degrees. That's to maintain any uptrend that would be solid. If we just go through it and start to go sideways, it's most likely we're going to start to sag. However, dollar strength, like I said, if that comes into play, then all bets are off, and I would say buy the dollar, sell the Swiss. But as long as the short-term and longer term interest rates are rallying in price, meaning going down in rate. That seems to be a catalyst for US dollar selling, should be. However, right now, as you can see, it's holding up, and that's where I think that we're setting up for sideways more than we are setting up for strength, because there's no reason to maintain strength for the US dollar in the midst of what's going on with these other markets. So it's very interesting to see how the European markets are reacting and how we're getting this show of strength now in the US dollar, the pound, and the Swiss. Now let's look at the US dollar JPY. This is a currency that is in a buy dip scenario for a very long time, with all the threats now that are coming out of China and a whole bunch of other things besides the probably inability for their economy to really start to grow at a decent rate. I believe that the Japanese yen is just going to be under pressure with most currencies, especially the dollar. So even if we get a big sell-off in the dollar and the euro and the pound and a bunch of other currencies rally against the dollar, I don't see that happening with the Japanese yen. I think we're in the middle of a nice corrective mode, not a consolidation mode. I think this is just the precursor for another leg higher that's going to target 112.5 up to basically 114 even on the extreme. This I'm not looking to see happen over the next couple trading sessions. I'm looking to see this happen over the next couple weeks, 2 to 4 weeks, most likely. And the trend right now is definitely a long-term bull. Intermediate, short-term, long-term, it all lines up for a bull. Only on the very short daily basis and hourly basis do we have us in a neutral to bearish corrective stage. And I would use caution about getting caught short. I would be leery of putting on too much risk as a bear in the US dollar JPY and look for buying opportunities, because I think you're going to have your biggest reward to risk ratio to the upside as this trade emerges over the next couple of weeks. As far as pivots, key off this low from last week and key off this high from yesterday. Definitely a breach of the high from yesterday has us back on the rally train in a big way. We're not far off from making all-time new highs, or not all-time new highs, excuse me, multi-week and multi-month highs. So, and as far as going lower, we're coming off a lower move high. Yes, we set a shorter-term lower move high, but now today we planted this low. If we continue to rally and get above 110.73, that's a higher move low, getting ready for definitely more buying momentum to occur above 110.73. So I would use caution if you're a bear, and definitely keep 110.73.75 as your risk, because above there you're pressing new highs when it's just basically the trend is your friend. And as you're making higher move highs and higher move lows, if you're going against that by selling it, you're going contrarian, you're going against the trend. So hopefully you do sell a high and not the beginning of a new leg higher. Remember, don't try and pick a top or a bottom. It's the graveyards of Wall Street are riddled with bodies that have tried to do that for their careers. So the trend is your friend. Be mindful of it and watch these pivot levels here. And definitely only unless we get below this 109.53 does it have the market not on edge, just set up for a bigger correction. Australian dollar, US dollar, this is a whole other ball of wax. This thing is going to continue to trade lower for a very long time. This thing is definitely in a bear market. Look for rallies to sell. Any move to the upside, any leg higher is definitely going to be viewed as a sell rally forecast. This market has so many fundamental reasons, not just technical reasons, why this has the ability to go a lot lower. Technically, the numbers are there and support a nice correction or continuation of the current correction, excuse me. So, and then there's a lot of geopolitical fundamentals also that now are in place that unless they change anytime soon, which doesn't seem like it's happening, and especially when it comes to China, then this market is going to continue to get buried. I would be very cautious trying to become a bull for the Australian dollar versus any currency cross, let alone the US dollar. Moving forward in the next 3 to 6 months, if this tone continues to be more aggressive and continues to escalate, you're going to see a lot of weakness in the Australian dollar. You're going to see a lot of weakness in the Japanese yen. Just to show you how this, what I mean, if you look at the Australian dollar versus the British pound, it's a bear. It just made new lows today. Australian dollar versus the euro. It's falling apart. It made new lows just last week, and now it's coming off a lower move high and looking to hit on the lows as we speak right now. So Australian dollar, JPY, even that one is trending lower, even in its own trade zone. Australian dollar, New Zealand dollar, look at that. It's been trending lower. It got cracked yesterday. It tried to make a run for a little bit of resistance today, and now it's just above the lows. It's positive on the day, but look at how it got cracked yesterday. Australian dollar, US dollar is in a sell rally forecast. Do not try and catch a falling knife. This is not me just being pessimistic and having an opinion. This is geopolitical. I mean, there's just no reason to even think that this trend will not stay, if not get more violent. The best thing I can say is wait for opportunities to sell whenever you see a spike, especially coming up near previous lower move highs. That's where I would look to find selling opportunities. So yeah, if we could get back to 76.53, 77.09 back in this area, I think that would be a wonderful place to sell. I do not see that happening anytime soon. I think that you're going to have to be very mindful of this downward slope that began back in May, at the end of May, and now is continuing. This is not a hard slope to keep. Just by attrition, to even come close, if we go sideways, we wouldn't even pierce this line until the end of the first week into the second week of September. Look at that. So just if we went sideways right there, we wouldn't even come up to this resistance here. And I don't see us getting very high at all. I think at the most we can get up to 75 even here and then fall back on the lows. This is definitely a sell rally forecast. I would be very mindful and don't think that this could not accelerate in a big way. Like the slide like we had here back at the middle of June into the, well actually it was the middle of June into the middle of June here, this 1 week sell-off where it dropped from, what was it, 77.75 down to 74.75. That's a $3 move in just a little over a week. Could we go easily from 74 now down to 71? Absolutely, absolutely. In fact, as on a monthly right here, if you look at this, we tanked going down into the pandemic back in March of 2020. So if we just do this on a Fibonacci basis, just the 50% level puts us back at 67.58. And I hate to tell you folks, odds are that that's where it's going. Now, is it going to take all this time to get out there? Is it going to take the next, like, maybe in 2022 or what have you? It's very possible. However, I don't think so. Markets tend to go out like they go in. If you look at the turn here, look at how this rallied up like this. We capped off here. We came through the turn. We capped off here. Boom. Here's the beginning of the sell. I see us getting down into this area definitely in the next couple of months, and very likely that before the end of the year we could be down here at 67.58. Very, very likely. This trend here is very steep. And it was taken out on that day right there. You can see where it crossed. So like I said, markets tend to go out like they tend to come in. Very likely to see some heavy selling coming in yet over the next couple of months in the Aussie. So no matter what currency cross you trade out there, if you trade anything with the Aussie, then you are looking to, I would say, overall be a bear for the Australian dollar versus every currency out there for the most part, except for maybe the South African rand, because that's one that is, you want to talk about a market that is in the tank, that's going to tank and continue to tank, and that's a big long-term sell. So if you want to look at the long-term, like just get short and forget about it for probably the next 6 months to 12 months and see how far of a ride you can get. Australian dollar, US dollar is there. Same with Australian dollar versus many other currencies. In fact, if you go to markets here and go to Forex, since we're talking about currencies and countries in trouble, Let's go down to South African Rand. We don't normally talk about this very often, but it is not getting very much play right now. Okay, so the US dollar ZAR right here. If you look at this, all right, this chart here is a daily. It's been rallying since the beginning of June. Okay, there's so much turmoil going on in South Africa right now. It's not even funny. I mean, it's ridiculous. It's actually pretty sad. So this market had been tanking for years. And then in June of 2021, boom, it turned around. Now, am I saying that that's the bottom and the bear market is over in the US dollar, South African Rand? Am I saying that because I'm bullish the dollar, period? No, I'm not bullish the dollar necessarily versus every currency out there, and especially for a very long time. But because of the political stuff that's going on in Australia, I'm bearish Australia versus the dollar. Because of the political stuff going on in South Africa, I am extremely bearish the South African Rand US dollar. If you are a bear riding this trade down, I'm pretty sure it's over. This was a buy signal last month right here. This is a piercing line buy signal on a monthly basis. That is a very, very big signal that should probably last the next 3 to 4 months. So you're looking at going from July into October, maybe even November. And how far can you go up as far as a move? Even if this market remains in the bull market, meaning the dollar is the weaker currency and this is just a correction, you know, we're looking for, even just at the 50% mark, a rally up to there. 0.618 puts us all the way up to 17. So look at this move we're looking at here. This kind of move, and especially if we're looking at it over the next 3 to 4 months. So here's 1, 2, 3, 4, puts us into November. Somewhere in there in that pocket right there. This is our target right here. How about that? That's a nice little move. And this is a trade that you're going to probably be able to see continue to be strong, not just on the monthly basis, but on the daily basis. This market set its bottom. It's making higher move highs and higher move lows. We do have radical sell-offs. This is a buy dip type of situation. Every time this market tries to hammer it, this here was a sell signal. This day right here was a big sell signal. Look what happened. It failed. Yesterday, this was a big sell signal. I guarantee you, well, I can't guarantee you, but odds are this signal will fail. So I'm telling you, if you're short right now and you're fading this market, this definitely is your risk level, 1479. Above that, it's going to skyrocket, most likely. So these are trades for the long term that I would be very mindful of. Australian dollar and also the South African Rand. Now, New Zealand dollar, US dollar, is a totally different story. So this one here, even though the dollar may be strong or stronger than the New Zealand dollar, this one is coming off of a lower move low that it set just a few days ago, but it's more sideways than anything, and it tends to go in tandem with the Australian dollar a lot. There's divergence now when it comes to that, and now you will see that New Zealand dollar, just like how the euro is making lower move lows versus the dollar, even when it bounces, it makes a new low, and then all of a sudden it looks like it wants to rally. The pound, however, isn't making newer move lows versus the dollar. It's making higher move lows, and it does sell off when the dollar gains strength, but the pound keeps bouncing back. New Zealand dollar is kind of the same thing, so it's more in a neutral trade than it is a bear. I wouldn't be the sell rally forecast so much as with the Australian dollar, but I would not worry about buying into dips in the New Zealand dollar, US dollar. I don't think it's going to get really too hammered unless you have a real major reason to buy the dollar, and I only see that happening if you see the sell a turn in the bond market, in the short-term interest rate markets, the 10-year, and we see them starting to become bearish and sell off. If they sell off in a big way, that would give credence to a stronger dollar, and then I would see New Zealand dollar, US dollar pressing the new lows a little bit harder. All right, US dollar Canada. Let's see what's going on here. This one continues to pressure resistance. It's making higher move highs. The dollar is getting strong here. I still think this is just a bullish correction. Overall, it's pierced the downward trending line that has kept this downtrend intact for a long time. Could this have been the very bottom turn here, and now we're going to see this market continue higher for the next 3 to 6 months, even 12 months? Very possible, but on a technical basis, maybe, yes, but on a fundamental basis, no, just because of the problems we're having between the United States and with Canada on a geopolitical stage. Ironically, I can't for the life of me figure out why we're having these issues, but we are. Let's see, well, we got some more people viewing us here on the chat and on YouTube and on Twitch. Thanks for joining in, guys. Don't be afraid to ask some questions if you like. So, so that's where we're at with the U.S. dollar Canada. So be mindful of these higher move highs and higher move lows. If you are a bull, I would say 124.27 is your risk level. We fall below here, maybe we get into sideways and not necessarily resume the bear market, but remember, this is in a bear market. Overall, this market's been trading lower for a while. We did have a buy signal last month. It confirmed this market wants to at least stop going lower for a while. That doesn't mean necessarily that we're going to get a monster rally. We may have already ran the gauntlet for it, but just in case, let's say we take the geopolitical stuff out of here and we look at the longer term trend here. 50% line right there, 0.618. Let's go down to the weekly. All of a sudden, we're coming out of this downtrend. The correction that we have on a daily basis doesn't look so big. It actually looks the same as it does on a weekly basis, but this is spanning obviously a lot more time. So we're rounding out this bottom, but remember, we still have yet to cross a couple of key levels. We haven't taken out this high here, and we haven't taken out this high here. When we get above 129.07, even still, we're set for sideways. We're not necessarily bullish, but the short-term trend is your friend. Buying dips may be the way to go. I would be cautious selling, obviously, into new highs right now. Wait for a decent signal, but then also don't get married to your longs, because this market is in a longer-term bear market. We could just be setting up for a correction right now. And if you look at it even on this basis, let's go from that to that. All right, we're just crossing the 0.618 for that. From this high to this low, we're just piercing into that right there. So could we all of a sudden have a turn of events and fall on support? Absolutely. Could this be the pivot, key pivot to trade above and then accelerate the rally? Absolutely, that could happen as well. So right now, just be very mindful of that. I don't really think that you're going to see much buying coming in. It does look very positive on the weekly and the monthly now, even the daily. But the trend, as I said, politically doesn't seem right, and I think that this is just a bull trap. I'd be very cautious, especially if we have a sell-off in the dollar versus any of the other currencies, especially the major ones, then this is probably going to turn on a dime as well. So don't get caught long buying into these highs. If anything, I would look for a dip to buy versus selling in versus buying into new highs. As far as selling right now, well, you're up against the beast. This thing continues to make higher move highs and higher move lows. Wait until we have confirmation of at least a neutral trade forming before you start to sell into this. So if you're long, keep your stops tight. That 124.27, I think, is where you definitely have to be very mindful. All right, let's go hit the cryptos now. BTCUSD taking a little whack on the daily basis. Look at that, down to 31,200 as we speak, 252. The 28,000 marker, wow, that's just like hanging in sight. If we get back in the upper 20,000s, then odds are we're going to end up drifting into the mid 20,000s as well. Is this market running out of gas? Is it in a bear market, or is it just pushing the correction? What do you think is happening? Well, I'll tell you what I think is happening. I think it's just a matter of you have a lot of scrutiny going on in the industry right now, and then you have other markets that are unhinging, and a lot of people are, there's people who are looking for the openings of everything to come, and they're really happy. And then there's a lot of people that are scared that we're going to end up being back into another lockdown, especially when you talk about like Australia. There you go, they're back in the lockdown mode. So if that starts to come back to Europe, let alone the United States, we're going to have a lot of issues. So we could have people end up buying huge amounts of Bitcoin after that begins. We know how that worked last year, or into this year. So we'll see how that pans out. But right now, I think the technology is just under scrutiny right now, and that's why you're probably not seeing as much buying interest. And we'll see how this pans out. I'm not very negative on the crypto space. I'm looking at the BTC as kind of like the dollar index now. So when you see all the other ones that we look at, then you'll start to see why maybe BTC is actually dragging. So it's not necessarily that Bitcoin is the problem anymore. It's the whole overall industry, if you will. So certain things will help give it a lift. Certain things will give it a break. And as we have liquidity spreading out between more asset classes inside the cryptocurrencies, that also, I think, starts to put it into a tighter market. So we're not going to see these radical swings all the time, perhaps, like we have been seeing for the past year and a half. I mean, when you're moving $25,000 a day in equity per coin, that's kind of crazy, wouldn't you say? So some might say no, but that's when you're using a leverage product, I could see it, but not something that's an outright, which that's what Bitcoin is. So right now, this market is hanging on its lows, coming off of lower move lows and lower move highs over the past couple of weeks. Overall, we're in a sideways trend, but right now, also in the short run, hourly and daily, we are looking to hit support. So let's see what the other ones are doing. By the way, for full disclosure, we are long Bitcoin and all the ones that we are talking about right now. So Ethercoin USD, this is another one. Now, this one didn't make new lows on the daily basis, but it's riding support. I think this is the one that's helping to hold up Bitcoin because the technology definitely has a lot of uses and it's growing at a rapid rate, and there's a lot of offshoots that can help to build up this this currency, this cryptocurrency as well. As far as the validity of the technology, it seems like it really is something that is true to fit, at least in the short run, and very adaptable and very acceptable, and being welcomed, not necessarily with open arms, but welcomed by the broad base of the financial industry and a bunch of other industries. So as these things become integrated, we'll see. You know, charities are now accepting donations in cryptocurrencies. So the more online these things become. Now, the one thing that could suspend the ability for this thing to go up to levels like Bitcoin had been at is that technology, the more it costs, the more less likely something else is going to develop to replace it, or that technology will not be used. So as far as a store of value, like I know everyone thinks all these things are going to $1 million each one day, and maybe they will be. I don't know. I think they're way overvalued to begin with. However, the valuations for everything is overvalued. But on a technology basis, you're not going to maintain these things if they start to get very expensive. So, but I do see, without a doubt, Ethereum maintaining this technology and getting back up above 3,000, 4,000. Could it go to 10,000? I could see it going to 20,000, but I don't see it going up in a way that people think that, oh, you're going to become a Ether coin billionaire, which maybe you could, but I think you need to have already bought a lot of it and have, a ton of it. So there's still, I believe, upside opportunities, but like I said, technologies tend to be, there's something new is going to replace it no matter what. That's why these things were created in the first place. One of the reasons these were created. So once they start to be self-defeating, then all of a sudden they become obsolete just by definition. So, or replaced by another one within their own industry. So that's why I think the Bitcoin is becoming like the dollar index. And that, too, gives you more of a reason of value for the overall market. All right, let's go now to XMR USD Monero. Here's another technology that is very viable. It's drifting, making lower move lows and lower move highs, but basically it's sideways. It's riding tight. I think the value for this one is definitely between 160 and 200 for sure, as far as maintaining this technology moving into the future. Could it go lower than those prices? Absolutely. I think it could trade at I would believe would be a discount at that level. Does it have a value that could be perceived as being much more valuable than where it is now? I think so. I think it could go back up near its highs at 500. Maybe even push 1,000 eventually. Same thing though, I think that's about your cap. So I think that it's tradable, and I think once it gets into that thing, you have to look at, I think, some of these cryptocurrencies kind of like bonds. They're being looked at like they're stocks or other assets, but because they're technology based, they do seem to, I think they have a synthetic ceiling, just because of the fact that they'll be replaced by something else, and then once they lose their viability, then all of a sudden they lose, obviously, their value as well. So, and then the technology will just disappear. So that's where the fate of these things exist, unless they can adapt, in which case then maybe there's more future value. So as far as any big major moves in this, am I looking for it? Absolutely not. But I do see that over the next year to two, or without a doubt, you could go back up near the highs, if not double the value it's already been at, So, but I think the trading for it is going to get much tighter and tighter on a daily basis as we have more of these things out there. And now let's go look at the Doge. Everybody loves the Doge. Doge is hitting new lows, back down under 19 cents at 18.20 as we speak. Wow, here we go. Is this thing ever going to go back up? They keep on putting billboards and marketing it. I don't know. Maybe that's starting to scare even all the Doge fans. You can't, I don't know, marketing any type of investment product is, there's restrictions on that in regulated markets. I know the cryptocurrencies market isn't regulated, but definitely marketing the capacity of telling people to invest and buy in it, that is a problem. That's a big problem. The other problem is, unlike the other cryptocurrencies we were just talking about, the viability of the technology lasting is also a problem. Who's going to embrace it except for the Doge fans? And then even that eventually, is going to end up, I think, probably not working out too well for everybody. I don't know. I could be totally wrong. Maybe the technology evolves and it gets embraced and it changes everything, and who knows, maybe Dogecoin outpaces Bitcoin. So, but as a whole, I think it's more of a pump and dump, pet rock stock meme thing that just has no true intrinsic value and has no even potential real net future value either, So I would use caution with this. I own this from some payments in the 40 to 45 cent level, so basically averaged out, I think, around 43 cents. I'll tell you what, I remember this spring, people were like, if it gets down to 30 cents, I'm going to buy it. Well, I certainly hope I hope it gets back up to 30 cents, and a lot of people want to buy it. So, I don't know how much buying is going on right now. Maybe there's a ton, who knows, but I think this is a falling rock, and it's making lower move lows and lower move highs everywhere until this thing gets a spike, which I don't know where that's going to come from, but we'll see. Maybe if the whole industry gets a big rally, that's where you would see another run up to maybe 45, 50 cents or more. I know that once it gets above my spot or even close to it, I'm going to start to liquidate, and once I have my profits, if it does go above where I'm long from where I got my payment, then I will just leave whatever extra is on there and whatever happens. And then if it goes to 1 million and I miss out on all the other ones, and except for like 1/2 a coin or something like that, then so be it, But I don't believe this technology has the viability or the true ability to move forward for very long. So you can split it, you can do what you want, you can advertise it, do whatever you want. I do not believe it's going to keep on going. So we've gone through those cryptos. Any questions? Let's take a look at the dollar index real quick from yesterday. Just like we've been seeing, we have these little sell signals. We've had 1, 2, and now yesterday 3 in a row that have failed. Does that mean the dollar is not going to eventually turn and this bull is going to run out of steam? Absolutely not. But what it does show us is that the dollar index is starting to be a tough gauge for where the currencies are going. The euro is pretty much the dominant one of the index, and it's really the one that's, the charts are basically looking like an inversion of each other, which that's what they are. There is an inverse relationship. So as far as the big markets, like we viewed from the pound and stuff like that, they're not doing the same thing. So be very mindful, like we were talking about earlier, that the dollar index is most likely going to be neutral, maybe even grind higher because of the state of the euro. As long as the euro continues to fall lower and hit support, and I think we can easily get back down to $1.17.5 over the next few trading sessions, that would just give a lift to the dollar index. Doesn't mean that you're going to get a big sell-off in the British pound or a big sell-off in the Swiss, or in this case it would be a rally in the US dollar Swiss, or a sell-off in the pound US dollar. So these are things to be very mindful of, remember, as we move forward. So we have divergence of currencies, meaning that the euro US dollar is most likely going to maintain its bearish trend, at least in the short run. It is not just viewed as a correction, it is looked at as a bearish trend. Now we go to British pound US dollar, that's a totally different story. This is being viewed as a downside correction that may be bottoming, maybe starting to neutralize before it goes higher or figures out whether it really does want to become a bear. So this one is not coming off of lower move lows and lower move highs. This one has already neutralized itself by having a lower move or higher move low after a lower move high, and then setting a higher move high and then a higher move low. We'll see what today brings. Even though we're trading on the lows today right now, I would use caution and not expect to see the pound really sell off really big. You can see how it rallied the other day. Look at how it rallied big, sold off yesterday, and we came, or 2 days ago, came almost all the way back on a settlement basis yesterday. And then today we don't even have quite the range of the last two sessions, but we're lower. Net over the past week, the market is lower. So it does have weakness, but not as extreme as with the euro US dollar. So the dollar index is probably not going to give you a good indication for that one. US dollar Swissy is same thing. You know, here we have a nice little rally going on, but we made a lower move low. Okay, so short run, this may be stabilizing. Should we have a big sell-off in the dollar, then I could see the dollar correcting back. But I don't think that's going to happen. I think more likely we're going into a neutral phase. We are currently in a short-term daily and hourly bear market. Even though it's up on the day, we set a lower move low. So use caution. Be very careful with this and mindful. Just because the dollar index goes up, because the euro is falling apart, doesn't mean that the US dollar Swiss is going to become a very big bull. So maybe in a sense right now where we're already in a head and shoulders formation where it has a chance to go even lower yet for the downside correction. So it's very choppy with the US dollar Swiss. Be very careful when you're looking at this. US dollar JPY, just like the Australian dollar, remember we're looking at this as an overall bull. Buy breaks, that's our scenario that we're chasing right now when it comes to the US dollar yen. Technically and fundamentally, there is no reason to be bearish US dollar yen, even if the dollar index continues to rally, or if the dollar index starts to sell off, and even if the other currencies start to rally against the dollar, like meaning even the euro, pound, Swiss, everything, the Japanese yen, most likely maybe on an intraday basis may absorb a little bit of that, but I think you're going to see it snap back. Be careful for bear traps with US dollar JPY. It's very likely that the US dollar is going to maintain its very bullish stance against the JPY, not just for the next few sessions, not just for the next few weeks, but for the next few months and maybe even over the next year or so. There's some things that could really shake up this market a lot. So be very mindful of your risk and be very careful selling into the US dollar JPY. Australian dollar, US dollar, this is the same thing. We're coming off of the lows of the day, almost making new daily lows. Use caution. Australian dollar, US dollar, even if the dollar index gets a big sell-off, this market is more likely to just get a short-term rally, consolidate, and then fall back on its lows. Technically, it could be done with its correction and start to go back to its bull market. That's most likely what a lot of technical-only traders would say. when you add the fundamentals and the realities of life and the economics that are going on right now, I truly believe that you're going to see Australian dollar versus all the different currencies maintain a bearish posture and in a sell rally forecast for the next 6 to 12 months at the very least. New Zealand dollar is not quite in that same boat. That one here, we're looking at it being neutral. Unless there's a big sell-off in the dollar, I don't see New Zealand dollar getting a big rally. But also, unless there's a huge rally in the US dollar, I don't see New Zealand dollar selling off in a big way. Not like Australian dollar, US dollar. I think New Zealand dollar may be setting up for a big wide range trade. We'll see how that develops and manifests over the next few trading days and also in the next few weeks. US dollar Canada, back to our last Forex cross, made a higher move high today. This is where the dollar is strong. I think this is going to run out of gas. It's definitely turned the long-term trend. It has broken the downward sloping resistance. It's maintained the monthly, weekly, and daily trend intact. I'm not calling for a bottom. It could be. It may have set at the bottom back in mid-May, where we're not going to see that low for another 6 months, maybe 6 years. Who knows? But I really believe that what was originally perceived as an upside correction still is an upside correction. There's a lot of other things that need to confirm to me that this is going to be a big raging bull. Now, there was such an extreme sell-off from last March, the March of last year, into May of this year, that we could still see a bounce back up to 127, 128. Those are extremes. Like right now, I'm afraid to buy into these new highs. I certainly wouldn't sell into them. I would wait to get a valid reason to become a bear, meaning find a lower move low after a lower move high, or at least a lower move high after a higher move low that at least puts you on neutral and gets you looking for sells on an hourly or daily basis. Until then, I think the trend is your friend, even though I think it's a trap. I believe it's a trap, and especially if we accelerate up to, say, 127, 128 very quickly, like it's when it blew up in this area right here, then I think that will be the capper, and then we're going to at least see a correction back to the levels that we're trading at right now. So thanks, guys, for showing up today. If you have not subscribed to our YouTube channel, Forex Trading Unlocked, please do so, or our Twitch channel. Don't forget to check out the book, High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. And we'll see you soon at forex-trading-unlocked.com or Forex Trading Unlocked on YouTube and Twitch. Have a great trading session for what's left of it today.